Welcome to Core Finance, where we're joined by Nicole Elliott, who is a technical analyst and the trader at the Investors Chronicle. How are you today, Nicole?
Oh, right, Zach, all right. It got caught in a downpour just now.
Has it stopped yet?
Well, now it's stopped, of course, now that I'm in here in the studio.
It just started raining as soon as I left the house this morning, so you can blame me for that.
Yeah.
Okay, well, let's have a look at the currencies, where hopefully there's not too much rain coming out of the Ichimoku clouds today.
No, it's raining down on the pound here, I suppose you might say. What I've got here is a weekly chart where you can see the massive spike on the left-hand side, and that was some nutter who decided he knew what the result of the referendum was going to be.
Oh, okay.
And then realised that he got it completely the wrong way round. And then you can see an equally silly spike low at the beginning of October. And it just goes to show how jittery this has all been. Now, it's really not a pretty market. On that low there that we saw in October, it actually took sterling to its weakest ever level on the Bank of England's trade weighted. So we were looking at something that was really, really cheap.
Looking down the barrel as well.
Yeah, exactly, looking down the barrel of the gun as well. But since then, it's sort of stabilised at about the 1.24 US dollars per pound level. And now we just started trying ever so slowly to move up another little notch. In other words, that sort of 120 level is dirt cheap, and I think people have got that into their heads. So now we've just gone up a little step, and sort of 124 is now cheapish. And we got lots of things along the way, but we have already retraced just over a Fibonacci 38% of the previous decline. And it's a sort of a watershed level, that one. You can see I've gone a sort of blue line to sort of really underline that level. And if we can start holding above that until the end of this month and then through the summer, I think the chances of us breaking the 50% barrier and the flat-topped Ichimoku cloud, which coincide exactly at $1.32 per pound, if we can, I think we've got a very good chance of breaking that, at which point yet another sort of cookie will crumble in terms of this meme that we've seen since Mr. Trump came in, and that he was going to cause America great again, and this would be reflected in the US mighty dollar.
People believed him. It's just tragic, isn't it?
Well, I suppose we faith,
Well, no, the other thing is he's not been able to do anything. He can't even shake his wife's hand.
Yeah, and it's so erratic what he's doing as well. I think that's also, in the long term, the more worrying. Not that he can't get anything through Congress. I mean, the US has been at a stalemate for I don't know how many presidencies already. So, we shouldn't be too surprised. I mean, what's disappointing in that he's got total control of both houses, and he's the president, and they're all Republicans, and still he can't get things done. I mean, it really is.
There's a message there.
Log jam there. So, right, moving on swiftly. This is a monthly chart of the euro against the dollar. And what we're doing this month, we're just sort of putting our nose above the parapet, the top of a sort of slightly irregular right-angled triangle. Now, it's really unconvincing. We're sort of, 3 weeks into the month, so we're barely squeezed above the top of that triangle. We still haven't retraced 38% of the most recent decline. And what I've got at the bottom there is a measure of momentum. And as you can see, that even in the periods when the euro has recovered against the US dollar, momentum is not particularly bullish. It's not spectacularly bullish. In fact, it's been descending all the way through. And we are starting from a pretty low level. And I mean, in this period since the financial crisis, which is what we saw there, 2008, you see, the euro has actually managed to lose a third of its value against the dollar. That is a lot. That is another one that's cheap. But what I'm trying to show here is this kind of concept of brief recoveries and then the undertow kicking in again, which is momentum is not really all that bullish. So any rallies for the euro are hard to manage, hard to and even harder to maintain. So it wouldn't surprise me if we went up a bit, maybe possibly meeting that ultra long-term downtrend line at the sort of 50% level and then just lose the will to live yet again. It wouldn't surprise me at all on this one. And my final chart is again a weekly chart with my clouds, and I think you'll agree the difference here is that A, this is the Australian dollar quoted as US per Aussie, and B, it's actually broken above the cloud while retracing just over 38% of previous declines since 2014. So this one's looking more promising, I'd say, than the previous two. Now, again, we're not entirely out of the woods, and what's really unusual, Zach, is that this massive long-term base that's been 2 years in the making is a symmetrical triangle. And this is very unusual. And I think this is what's possibly going to catch more people by surprise. And some people would say, look, Nicole, we had that bit on the left there at the 50% level. That is the main resistance rather than the top of the triangle or the 38%. Yes, I would agree with them there. So, you know, we're not out of the woods, but I think this one has a much better spring in its step. And should we get, you know, a second consecutive week where we close clearly above the top of the triangle and clearly above the 38% retracement, I think this one you might find is going to scamper higher rather than claw its way as the other two are more likely to do. In that it's just, we don't often see triangle bases, you see, so I think people weren't looking out for a base, they were looking for a continuation.
Yes, yes, exactly.
And this is where the surprise element comes in. And so rethink time here, as is the case with many other major currencies against the US dollar, we're seeing it.
So it's a summer of surprise, really, in the FX market so far.
I don't think it's a summer, but it's the original January assumptions that were kind of wrong, and they've been slowly unwound over the last 3, 4, 5 months. Yeah.
Okay, we'll see how that goes. Nicole Elliott, technical analyst and the trader at the Investors Chronicle. Thanks for coming in today.
Thank you.